morning and welcome to the LNG Marketplace Weekly News Flash. Here's the latest news we have selected for you from all over the media. Gunvor has cemented its role as the world's largest independent trader of liquefied natural gas. The trading company delivered 16 million tons of LNG this year, boosting volumes by 45% from 2018. Last year, it already topped larger rivals Vitol and Trafigura. Gunvor has also emerged as the largest charter of LNG vessels this year, with more than 50 bookings conducted in 2019 and 15 ships under time charter now, as stated by Bloomberg. Trafigura Group, another global commodity trader, increased its annual LNG trading volumes by 27%, driven by trade flows and the start of new contracts. Trafigura's rise in trading volumes follows a more than 75% increase in rivals Glencore's spot LNG traded volumes in 2019 compared with last year, signaling the rise of LNG liquidity in the spot market, as we read on Finance Yahoo. According to World Oil, one of China's top liquefied natural gas buyers, PetroChina, offered to sell cargo to Pakistan LNG on the cheap, what is a fresh sign of the massive oversupply on the market. Chinese companies stocked up on LNG for the heating season, but warmer temperatures have curbed demand. At the same time, supply is ramping up at new projects. Prices in North Asia are more than 40% lower than they were a year ago, and none of China's major buyers are currently seeking prompt deliveries for the winter. PetroChina has traditionally been a buyer, but recently has trading ambitions. Pakistan Energas plans to start the nation's largest liquefied natural gas import terminal in 2021 to help meet soaring demand. The project is being supported by ExxonMobil. Pakistan is trying to chart a way out of reoccurring economic boom and bust cycle. Many factories used to remain shut for months as there was little gas to spare in winters when domestic heating consumption peaked. The crisis only started to ease after the nation commenced LNG imports 4 years ago. This piece of news we found on RigZone. Cyprus and Chinese-led consortium have signed a contract for the construction of the country's first natural gas import LNG terminal in the form of FSRU. The gas will be mainly used for electricity generation. Also, an additional tender for LNG supply was launched, attracting expressions of interest from 25 companies. The terminal will be wholly owned by the Cypriot state and afford flexibility for spot purchases of lower-cost gas on the international market, while allowing for future use of natural gas from gas fields discovered off Cyprus's shores, states Chinese portal XinhuaNet.com and Seatrade Maritime. According to S&P Global Platts, Kinder Morgan's Elba liquefaction terminal in Georgia shipped its first export cargo 5 months after production began at the smallest of the 6 major U.S. LNG facilities. The cargo is expected to go to Pakistan, but final destinations can change based on market factors. Brazilian state-controlled Petrobras has started pre-qualifying bidders for long-term lease of its Bahia LNG import terminal, opening the company's lock on Brazil's LNG imports. Despite significant unused volumes, Petrobras has not allowed third-party access to terminals, as we read on Argus Media. Liquefied natural gas is a financially compelling investment for very large crude carriers on the Arabian Gulf to China trade route, according to a new study. The business case compares relative investment performance of 4 propulsion alternatives to indicate LNG as marine fuel that delivers a strong return on investment in a 10-year horizon. The route was chosen because it is a major energy trade corridor from the Middle East to China. This we have found on Kallanish Energy. As shipping companies prepare to bring their fleets into compliance with IMO 2020, LNG is poised to capture a small but growing portion of the international bunker fuel market in the U.S. and across the globe. According to industry coalition C/LNG, there are currently 170 LNG tankers in operation and 184 on order, states S&P Global Platts. And last but not least, Tokyo, Japan-based MOL begins a study into hybrid battery hydrogen LNG carrier with a goal to create a ship that does not emit carbon dioxide, sulfur dioxide, nitrous oxides, or particulate matter when in port, harbor, or coastal waters. Battery-powered vessels are not a new concept, but they tend to be tugs and short sea ships. The ship, only while navigating the open sea, would use liquefied natural gas-powered generator, resulting in significantly lower emissions than current vessels equipped with diesel engines that run on heavy oil, as we read on FreightWaves. That's it for this week. Tune in next week for more news, and until then, thanks for tuning in.